You were listening to chartingwealth.com for Wednesday, the 5th of August, 2015. Our training and trends, we start with gold. Why don't we start with gold? Because some interesting things have been happening. We started charting a down movement in gold way back when it crossed over the MACD, the moving average convergence divergence, around the 23rd of June, and has continued to move down since then. It's moved down and down and down, actually to a very low low, right around $104 or so. It actually closed today. When I say today, I'm talking Tuesday the 4th. It closed down at 104.31. Actually, it was up for the day a mere 1/5%, but it has continued to move down over the last many days, and we've been watching it. We watched it as it tumbled. We talked about buying in way back around the 23rd of June, and you would have profited very well if you had been in an inverse fund, and we always talk about here buying a virtual trading fund, not actually spending your money until you are trained up and can make your own decisions. We are not a stock calling service. We are simply an education company, but we like to educate you on the market. As you learn, you can start making your own decisions, but you would have done quite well in an inverse fund. Now, let's see what gold is really doing. It is continuing to move down, staying around the level of about 104. It's right in there. It's actually exactly today where it was back on the 27th of last month of July. And it really hasn't moved much even below that when it was on the 23rd. So these are 2-day candles. What are we seeing happening? Is gold going to continue to go down, or is it going to bounce back up? Good question. Right now, it's still in a confirmed down move. The derivative oscillator is losing some of its speed. That tells us something, that the movement down is not as impactful as it had been as it slides sideways. If we drop back like we always like to do and look at our 4-hour chart, what do we see? Well, we see a chart that's been sliding sideways since about the 22nd of July, and it has continued to move sideways, broke over the 2-day down trend line, and has continued to slide sideways. Crossed over going up on the 4-hour moving average convergence divergence, the MACD, and at the same time crossed over on the derivative oscillator, but has continued not really make any up movement, just slide sideways. We have seen the Bollinger Bands be very wide and now have shrunk down to almost a small little tunnel. Those are volatility bands. It means as you see the movement reduce up and down, the volatility bands shrink because why? There's no volatility. It's sitting on the very bottom of the Bollinger Band right now at 104.42. Let's see where the bottom Bollinger Band is on the 2-day chart. It is significantly below that, actually a lot more downward pressure, and it's opened more on the big chart to actually move down even more. So as we continue to watch, we need to see just what is going to happen. Now, again, on the 4-hour chart, the Bollinger Band's tightened up at the bottom, so it'd have to push through the Bollinger Band to keep moving down. However, up movement would not be a problem. So let's just watch. The derivative oscillator is about the same today as it was the day before, a little less than back on the 31st and such. So even that upward movement is slowing. It appears that the MACD has continued to keep about the same distance. It's not really coming together to cross over going down. But if it does break through this low floor that it's in right now, it could move significantly lower. But what are the chances of it doing that? Well, it is at a historic low right now. We just need to continue watching it. If it starts to make some significant pressure on an up movement, then of course you want to follow that. Make sure that it does cross over on the 2-day chart, and then you can feel safe about significant long-term up movement, perhaps, depending again how everything else wraps up. But you can tell that it has been going down for a very long time. Its up movement since it crossed over on the 27th has not been significant at all. It's just slidden sideways. So where's it likely to go? Up or down more? Depends on a number of things. All we're doing right now is waiting for the sign. So what do you do when you don't know what to do? You wait. You wait to see. Hopefully, if you made all the money in the down move once it crossed over, and you made all this money in an inverse fund, you have taken your profits, because now it's in sort of a what is it going to do right now? Holding on to it now is just pending dangerous, because it can go either direction at this point. Now, where, if you had to guess, is it going to go? Guess what? We don't guess. We don't care what the guess is. We look for what the charts tell us to do. So that's our teaching experience for the day today. We're going to wait and see what happens to make an intelligent move on gold. Now, let's go and start at the beginning. IYY, it is our total market. Where is it? It is actually crossed over, going up around the 29th. Although we've got a doji for the last 2 days, it's trying to push through our 2-day moving average. If we drop back to our 4-hour chart, what do we see? We see that the total market has crossed through the 2-day trend line, crossed over going down. So that tells us that there's a great deal of downward pressure pushing on the market, even though technically it is still in an up move, but could be coming close to moving over. Derivative oscillators also lost a lot of its speed. So continue to watch IYY, the total market, and see what's happening. Let's look at SPY. That is, of course, a Standard & Poor's 500. It bounced off the signal line on the MACD and started moving back up again between the 27th and the 29th, pretty much on the 29th, moved up over a few days and has now crossed over back through the downward movement it had had before. It actually is crossed back through. If we redrew our trend line on an up movement, you can see that it has actually, and I'm doing this for those who are watching live, it's not quite crossed over going down. So again, we are technically in an up move on the SPY on the 2-day chart, and on the 4-hour, the half-day chart, it is crossed over as of this morning going down. So again, it has not crossed through officially on the 2-day chart, but it has closed below the 2-day trend line on the 4-hour chart, crossed over going down. Technically, we've got a bit of schizophrenia here. Big chart's up, which is what we go by. Small chart is down, so continue to watch. Maybe we'll have a bounce back. But again, confirmed up move, but barely in SPY. And the Qs, where are we on the Qs? Let's range back out to the 2-day chart. The Qs is still on the 2-day chart in a confirmed up move, although it does appear that the MACD signal line and the MACD are coming closer together. It is a green, pretty much a doji over the last 2 days, means lots of indecision. Qs hasn't figured out which way it's going to go. Of course, that's the NASDAQ 100. And on the 4-hour chart, you of course see that it has continued to be in a down move, has not crossed over yet on the 2-day chart. We did see the derivative oscillator flip over. So continue to watch SPY, the total market, and the Qs to see if they're going to have confirmed down moves, or if the spring they were showing a couple of days ago up is going to sustain. We are still on all of those charts as far as the large chart goes. We are in confirmed up moves on the S&P 500, on the Qs, and also just barely holding on in the total market. That's where everything has ended up on a Tuesday. As we go into Wednesday, the 5th of August, we sure appreciate you joining us. We hope that you get a lot out of this. We try to bring you both training every day along with trends. Love for you to follow us on Facebook and Twitter, also on Instagram. Just go to Charting Wealth. That's what our keywords are on all of those social media. And please go to our website, chartingwealth.com. Sign up for our newsletter. You'll get these videos every day, plus a lot of good training, a lot of good access to materials there. We love to hear from you. Love to know what you're thinking, what we can do to help. God bless. Wish you the best in investing from chartingwealth.com.